The market's been closed for a couple of hours. It's November 17th, Wednesday night. That means it's time for my weekly swing trading video. I'm going to see if I can find a trade. We're going to take a look at the trade that I highlighted last week and a couple of other trades that I've shown during the course of the week. Every day, I try and post videos to YouTube. So if you're looking for swing trading ideas, make sure to subscribe to my YouTube channel and turn on your notifications. I don't know when I'm going to do these videos, but that way you'll never miss them. A week ago, I showed you RB. LX. This long green candle right here told me that this stock was ready to rock and roll. Earnings after the close, blows through major moving averages, blows through horizontal resistance. I knew that this was going to be a nice entry point for it, and look what it's done since then. Now, I knew that the stock had a chance of retracing after such a big gain, so the instructions that I left were to try and sell an out-of-the-money bullish put spread, keying off of this $90 support right in here. If you had your order working and you were selling the 90.85 for $1 credit or the 90.8750 for a 50-cent credit, you're able to get that trade done because look at what the stock did. It pulled back the next day, gave us an opportunity to enter. That support level was still preserved, and now the stock is off to the races. Heavy volume, love this stock. So I'm going to take a look at a couple of others. Let's see here. Netflix. That was the stock that I highlighted Sunday evening. Downward sloping trend line, breach to the upside. This is Friday's volume bar. That's why I like the trade. I said, hey, look, this stock has a chance now that it's gotten through this bullish flag formation to run up and challenge the high. So I like selling an out of the money bullish put spread keying off of that $650 support level. Well, if you're out there trying to get the trade done, you can see how Monday that stock pulled back and it tested $670. And I know people got filled on this because I've got members in the chat room who told me as much. So they were able to get that trade done, the 650, 645, going 2 weeks out, November 26th expiration for a $1 credit. Really nice trade. This morning, Qualcomm, before the open, did a video, said I really like Qualcomm. I still like Qualcomm. I love Qualcomm. I love this earnings breakout right here. You can see the big gap up through horizontal resistance. Stock is able to consolidate some of those gains and then off to the races. Long green candle yesterday. This stock is going to keep going. I didn't expect it to finish higher today. I would have just been happy if it preserved the majority of this candle, at least the halfway point. It could have retraced, and it did retrace a little bit today. This was a solid close. I'm expecting the stock to lift off tomorrow, Thursday. You can do some call debit spreads on Qualcomm, a little bit longer term if you'd like. You can also sell some out of the money bullish put spreads on Qualcomm. I think you can key off of the 170 level. You can see that was prior resistance, now support. You're not going to get a lot of credit for it because it's at $183. So any little dip that allows you to distance yourself from the action and get that 170, 167.50 bullish put spread done for 50 cents, it works. If you can stay within 3 weeks, even better. So I don't see any big market speed bumps ahead. So let's take a look at the market. Always have to get our market bearings. The one thing I do see coming up in the middle of November is the FOMC meeting. Now, that's going to be a potential speed bump because Fed officials are going to be tapering and they're going to be perhaps setting a timeline for tightening in 2022. We don't know what that might possibly be right now, but most analysts agree that the Fed, because of inflation, they're going to have to start stepping up their tightening. Also, economic conditions domestically don't warrant having all of this liquidity out there. They can start to pull back on some of that liquidity now that the coronavirus cases are subsiding. So that is a potential speed bump because typically the initial reaction to an interest rate hike is negative because everyone's worried that tightening is going to lead to an economic contraction. So they err on the side of safety, they risk off, they sell some stock, and then after a few months, when they're confident that higher interest rates have not spoiled the economic activity, then they start to come in and buy. We've had many market situations in the last 5 decades where higher interest rates have led to higher prices in the market. So the reason for the interest rate hike is critically important. Ideally, it's because of economic growth. In this particular instance, we need to be a little bit cautious because we're seeing inflation without necessarily seeing the global economic growth. China's still slow. Asia in general is slow. Japan, Korea. So we need to be a little bit careful. But between now and year end, we really don't need to worry too much about what's going to happen 6 months from now because the market bid will remain strong into year end. So this is a good time to sell some out of the money bullish put spreads. If you see any dips, they're going to be brief, they're going to be shallow. Those will be your opportunities to get these trades done. So look to continue to use that strategy. I'm going to make this really simple. I'm going to go into a search that all of you have. You can see I'm in Pop Bull, my single favorite search. I'm going to go into the top here. We're going to take a look at TJX. You can see TJX had a nice breakout through this $72 horizontal resistance. Earnings before the open challenged the all-time high and backed off hard. Now, this I do not like. I do not like to see candles like this. So I would not be taking this trade. Going to go into a 5-minute chart. You can see steady selling pressure the entire day. But I'm going to go into the next one. Apple. Apple had this nice opening move higher. Long green candle, doji, long green candle, and then some compression. Let's put up the 10p indicator. I want to talk a little bit about technical analysis. Some of you that are watching this are day traders. Many of you are swing traders. If you're able to watch the market during the course of the day, let's talk a little bit about entry points during the day. I'm going to go into Apple first of all. I always like to get my bearings on a longer term basis so that I know what the stock is doing. You can see if you visually draw a downward sloping trend line right here, and I'm going to draw it in for you, you can see a very nice breakout through technical resistance. So I'm going to start it here, pull it down like that. You can see the stock was breaking out through that technical resistance, through that downward sloping trend line. Major moving averages intact. Everything looks good there. Hey, this is what we want to see right here. Big volume breakout. So let's recap a little bit because I've had a lot of questions on this. How do I know the right stocks? How do I know when to enter? What are the things that we're looking for? Well, we're looking for longer term technical breakouts on a daily basis, and we're looking for nice big volume bars like that. Let's put up the 10 SI indicator, and now you can see orange line above zero. Yeah, got everything. Relative strength, heavy volume, technical breakout on a daily chart. Go into the 5-minute chart. We can see the relative strength right in here. You can see how we've got a compression here. Big breakout to the upside. Stock's already above the prior day's high. Long green candles. This is your entry point right here. Relative strength. Let's put up the SPY overlay. We already know it's strong because we can see the orange line above zero. But let's take a look at what the stock did and what the key tells were. This is one big tell right here. You can see market down, down, down. Stock flat, compressing. This is a coiled spring ready to release. As soon as the market finds a tiny little bid in here, see you later. Off to the races. So Apple did give a little bit back, but you can see the market pulled back today and then it just chopped around for most of the day. So it gave back a little bit of the gains. I still think Apple is going to head higher. So that's one that you want to put on your radar for tomorrow. This is a stock that you're going to want to take a position in. So how do I know when to enter? Well, you can draw your horizontal alert line right here. So if you come in, you click alert, click, high of the day, draws it across. You're going to get a pop-up alert that comes up. Hey, Apple is on track right now. You come in, you take a look, you go, hey, there's the relative strength. I can also put up the 1OP indicator. And there we can see we had a bullish cross right back in here. So where all systems go on this, this is a nice entry point for the stock. We've got the bullish cross on 1OP. We've got 1OSI above zero. That's indicating relative strength. We have a breakout to a new high of the day. You enter here, you're making fantastic money. How do I know when to enter? Well, when you see a big market drop like that, you should be on guard, but it's always prudent to take profits along the way. So we get a red candle in here. Okay, still early. Market's still pushing higher, no problem. Red candle in here. Okay, still pushing higher. Now all of a sudden we crest and we've got a bearish engulfing candle. Engulfs that candle right there. It's not a big one, but by the time you pull back on this candle, now you've taken out the open of that green candle right here. This would be a good place to just take your profits. See if another trade sets up later in the day. You can also use an EMA 9, put the EMA up, and there you can see that same red candle poke through that EMA 8. That's your exit point. And if you got out there, you made excellent money, 154.41. And let's say you got in here on the open. So you had about buck and a half on Apple that you could have made pretty easily, which on this stock is nice because it doesn't carry a lot of option applied volatility, has very reasonable premiums. And that green candle right there, I'm not saying you would have gotten in right here because you let that candle finish. Yep, it closed here. We've got a new high of the day. Yeah, now you can get in right here. So I like Apple on a day trading basis today. I like it on a swing trading basis. I believe it's going to continue to march higher. So how would you play it? Well, you can take a look at the chart and you can try and estimate where you think this stock might get. Can it get back to the high of the day around 155? Yeah, I think it could. Do you think that it could get up to 156? Maybe up to this high right here? That was at about 157 approximately. Yes, it could. So how do you structure this? If you wanted to be aggressive, which we only have 2 days left till expiration on November 19th, then you could look to do maybe a 155, 157 call debit spread. Now, on something like that with only a couple of days left, I wouldn't want to pay at max. It's going to be worth $2. I wouldn't want to pay more than 60 cents or something like that, a third of the distance between those strike prices. And I don't really have a strong market to lean on. So let's put up SPY. There you can see we're really just kind of floating around here. There's not much going on a day-to-day basis. It's Wednesday. What makes me think that Thursday and Friday are going to be gangbuster? Probably nothing. We've got normal options expiration, monthly options expiration, but that's not such a great catalyst. I do think that momentum alone is going to fuel a move higher in Apple. So what you can do is if you like Apple on a longer term basis, you come in Friday and you see that the market is up and you feel pretty confident. I'm not talking about the S&P opening 20 points higher. We don't want to deal with that. Do not chase opening gaps higher right now. That is a stupid move. Okay? You'll have plenty of chances to get long. The market is near an all-time high. You do not need to chase anything. See all these red candles in here? You know what a red candle means? That means that the stock opened here and closed lower than the open. Opened here, closed lower than the open. Red candles mean there are opportunities to get long, and you do not have to chase opening gaps higher. So don't do it. So I'm going to go into a 5-minute chart. Here we had a gap down, but yesterday we had a nice little opening move higher. This is fine because the market's opening pretty flat. And if you had a nice stock and you saw these long green candles stacked in here, okay, I can start to get in on this because this is actually a pretty powerful move. Certainly by this pullback here, and now you get some more green candles stacked. Okay, yeah, I can feel pretty good that the market is going to be heading higher. But usually when you get a gap up, you're going to get retracement. Gap up. Oh my gosh, Pete told me to buy Apple. I got to buy Apple. Here's the market. It's trading higher. It's going to go to a new all-time high. Look at the volume. Oh my gosh, I'm so excited. So you come in, you buy the open, and then you spend the rest of the day lamenting at how stupid you were for buying the open. So don't buy the open. If you get an opening gap higher, wait for a compression, wait for a pullback. This pullback is going to allow you to evaluate Apple, and you're going to be able to see, does Apple have relative strength? And this type of market pullback is going to reveal that to you. And if you come in and you see that the market opens higher and spends the first 3 hours drifting lower and Apple has relative weakness, don't do the trade. Real easy. Let me see if I can find a stock that I think might have performed well in the last couple of days. I know one that should work here. So there you can see you've got your market opening down, and I overlaid RBLX. Let's actually reverse that, because what I want to do is I'm going to go in and I'm going to look at a chart of RBLX, and we're going to go back to that day with the opening gap higher that was 2 days ago. So let's put the SPY overlay up. Let's go back and take a look at it, and then you'll know the pattern to look for. There you have an opening gap down. Opening gap downs are incredible. The stock opens down, market opens higher, so you don't have relative strength in here yet, okay? You can see how the market pulls back here. Look at the stock. Boom, boom, boom. 10P bullish cross, relative strength. Everything looks good in there. But I want to go back to that day when we had the gap higher and then the pullback. And this was the day right here. So gray line is the market, opening gap higher, and then the market spends the rest of the day retreating. So as the market starts to pull back in here, let's say that RBLX was the stock that I highlighted, and I said, hey, I really like this stock. You should get in. Well, all of a sudden you see the market pulling back, and you're like, not today. I don't think I'm going to be too anxious to get in. I'm going to wait to see what happens. You get this big drop right here in the S&P 500. Look what the stock did. Held up really, really well. This tells you buyers are in there. Buy, 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 buy. Getting as much stock off as they possibly can, trying to take advantage of any selling pressure that's taking place because of the overall market decline. So that's the same thing you want to be looking for with Apple. If you get a market retracement, a market pullback on Thursday morning, you want to see Apple holding its own or ticking higher when the market is coming in. If you see that, you don't have to wait very long. Go in, buy the stock. Should perform well for you. I like the D1 chart on Apple. I like what I saw today out of it. I'm going to click off the SPY, and we're going to go back. We're going to take a look at Apple one more time. So I like buying Apple. I think a couple of different approaches you can use. You can come in and you can buy a longer term option, buy an in the money option that expires in December normal expiration. You get a nice rally in the stock. Look to sell some weekly calls against it. That's a diagonal spread. Take advantage of some time premium decay. I don't think the market is going to lift off from now until year end, but I think it's going to be able to tread water, maybe inch a little bit higher. That'll give you some exposure to Apple. You'll be able to take advantage of it, and you'll be able to offset some of the cost by selling out of the money weekly premium against it. So that's a nice way to approach that stock. But by all means, market gap higher Thursday morning. Do not chase it. Do not chase Apple. Wait for the market to pull back or at least compress. Make sure that Apple has that relative strength that we're looking for, and then take a position and watch for Apple to gradually float higher for the next week or two, challenging that all-time high. That's your pick of the day. Please make sure to watch my daily YouTube videos. I'm not doing what I did earlier where I've got a bunch of new trades that I'm putting on Wednesday nights. I'm really trying to show you how to find the trades right now. I'm trying to show you trade ideas. I still think that this is a good market to keep everything shorter term, but I'm providing you with daily picks in those videos, and they have been spot on. So please make sure to watch that. Downward sloping trend line, broken to the upside, major moving averages intact, big volume. This is a type of stock that you want to be in. Just make sure that you have the market on your side. You've got some nice market support. After the open, take a position. Thanks so much. See you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.